Hello, welcome back to Reconstitution of Partnership, the next problem on admission of a partner. Yes, the problem goes Rajesh and Rakesh are partners in a firm, sharing profits and losses in the ratio of 3:2. Their balance sheet on 31/3/18 stood as follows with the following adjustments. So adjustments are on 1/4/18 Sham is admitted into partnership on following terms. He has to bring rupees 10,000 as his capital, rupees 5,000 towards his share of goodwill to get 1/5 share in future capital, that is future profits. Followed, it's a print mistake, it should be future profits. Next, appreciation in building by 20%. Maintain 5% provision for doubtful debts on debtors. Provide for outstanding repair bills rupees 1,000. From this information, we have to prepare revaluation account, partners capital account and balance sheet of new firm. Yes, now the balance sheet is given on 31/3/2018. Liability side, creditors 41,500, reserve fund 4,000, capitals Rajesh 30,000, Rakesh 16,000. Come to the asset side, cash in hand 22,500, bills receivable 3,000, debtors inner column 18,000 less provision 1,000, outer column 17,000, stock 20,000, machinery 4,000, building 25,000, total of balance sheet 19,500 and 19,500. Now we'll start with the solution. So draw revaluation account. Now to draw revaluation account, you require 4 to 6 lines. 4 to 6 lines or maximum 8 lines. Fold the page. Take debit side and credit side. Write particulars and amount column on both the sides. Now we'll see the adjustments which are given in the balance sheet. First adjustments says that Sham has been admitted. Sham has been admitted and he is going to get certain goodwill and capital which will be taken in partners capital account and balance sheet. Come to the next one. Now we are having building is to be appreciated by 20%. So the second adjustment, you have to raise building by 20%, which is increase in the value of asset. So whenever asset is increased, it will be an gain. So all gains have to be credited. So take it on the credit side of revaluation account. 20% of 25,000 amounts to 5,000. So write 5,000 on the credit side in amount column. Next, you are having provision for doubtful debts. Now when provision for doubtful debts are to be taken, you have to raise it by 5% or maintain at 5%. Already we are having 1,000 which is existing in the balance sheet. So 5% of 18,000, always your percentage has to be calculated on book value, the opening balance, that is 18,000. 5% of 18,000 is 900. So there is a reduction in the loss by rupees 100. So 1000 minus 900 is 100, which is the reduction in the loss. Therefore, it is to be taken on the credit side. Whenever there is reduction in provision for doubtful debts, take it on the credit side. If provision for doubtful debts are increased, take it on the debit side. Now coming to the next adjustment, that is outstanding repairs. So outstanding repairs is an liability which is yet to be met. So 1000 rupees to be debited to revaluation as it increases the expenses. Now take the difference between credit side and debit side. Credit side total is 1500. Debit side also write the same total of 1500. From 5100 minus 1000. The difference of 4100 has to be distributed among the old partners in the ratio of 3:2. So 3/5 will amount to 2460 and 2/5 will be 1640. So we complete the revaluation account. From this revaluation account, we are going to prepare the partner's capital account. So now again divide the page in two parts, debit side and credit side. On debit side, draw 4 columns and credit side, draw 4 columns. Let the particulars column be a little bigger and equal part for partners, equal columns. So from balance sheet, we are going to take the old partner's capital account. So Rajesh account is 30,000 and Rakesh amount is 16,000. Next, coming to revaluation account, we are having revaluation profit. Transfer the revaluation profit to partner's capital account. 2460 and 1640. Next, come to balance sheet. We are having reserve fund. Reserve fund total is 4000. This 4000 is again distributed to old partners in the old ratio of 3:5. So 3:2. So this is distributed in the ratio of 3:2. So you are having 2400 and 1600. So there is a print mistake of 2. Instead of 2, they have written it 5. It should be 3:2. Old ratio is. Now coming to the adjustment, that is adjustment 1. Sham is admitted. So Sham is getting capital of rupees 10,000. So take it in Sham's credit side of Sham's capital account by cash 10,000. Next, he has brought goodwill in cash. So write by goodwill or by cash in a bracket, write goodwill. So whatever amount of goodwill is brought, it is to be distributed to old partners in sacrifice ratio. So sacrifice ratio is not given, so old ratio itself is taken as sacrifice ratio. So 5000 is to be divided in the ratio of 3:2. It will be 3000 and 2000. Now total the partners' capital accounts on the credit side. So you'll have Sham, he was getting 10,000. Then you are having total of Rakesh is 21,240 and total of Rajesh is 37,860. Write the same total on the debit side and write to balance carried down with the difference amount of all the respective partners. 37,860 for Rajesh, 21,240 for Rakesh, and 10,000 for Sham. After preparing partners' capital account, we are going to prepare the balance sheet on the date of admission. So on top write balance sheet as on 1/4/2018. Divide the page in two parts, assets and liabilities, and amount column on both the sides. Now take the liabilities from the balance sheet. We are having creditors which is not at all having any adjustment, so write the same amount of balance sheet. Creditors 41,500. Next, we are having in the revaluation account outstanding for repairs, that is note 4 or adjustment 4. It is 1,000. Next, come to capital accounts of the partners. Write the closing balance. Rajesh 37,860. Rakesh 21,240. Sham 10,000. Now come to asset side. Now asset side, cash in hand, it is already having amount of 22,500. Next you are having the total capital which is brought by Sham 10,000 in cash, and then you are having 5,000 which is the goodwill amount. So the total of goodwill and cash brought by incoming partner is added to cash in hand. So you'll have a total of 37,500. Next, there is stock. As it is, no adjustment is there, 20,000 in the outer column. Bills receivable, no adjustment, write 3,000 in the outer column. Coming to debtors. Debtors book value was 18,000. Now the new adjustment is you have to provide only 5% on total debtors. So 5% amounts to 900. So that amount has to be deducted from 18,000. Your total will be 17,100. Next, machinery. No adjustment, 4,000 in the outer column. Building, inner column you write the book value 25,000. Add the appreciation done of 5,000, total will be 30,000. So all adjustments and entries of assets and liabilities are done in the balance sheet. Now total your asset side. The total will be 1,11,600. Now write the same total on the liability side and start reducing the amount of liabilities one by one. Your total amount should be 0, or your total of liabilities and total of assets should give the same answer. Then the whole problem will be correct. So we'll see for some more problems in the next class. Thank you.